Great and beautiful morning, afternoon, and evening to you, or wherever you are joining me at this moment. Welcome to 172 edition of Investdata Trading Academy live with Ambrose. Say welcome to another trading day again. Once more, the market again, on the global stage is mixed as we speak now. We are seeing a mixed market. Why down here, our market has opened green after the inflation figure was released yesterday. We saw an uptick in the inflation figure on a year-to-year basis, but I'll tell you we'll continue later on that. But as we speak now, the global market is mixed. We are seeing that the market in US is still in green at this speak now. You can see that the market there is in green, which is also good for investor. And that of a Europe market, as we speak, is also down or mixed. Let me use that language. Before at the economic data, I told you importance of economic data in investment because these are factors or data that give you an insight how the economy is doing. Because you can't separate equity investment or any investment you are doing from the economy because it's the what happening in the economy that also affects either a sector or industry or individual stock you are or the kind of assets or investment window you are in. But this economy you can't separate it from what we call investment decision. That's why when you see economic data, when it comes to the market, perception or reaction to it also have a way of shaping what investors' sentiment. What we saw in matured market when the production price index for US came, we saw that it was better than expected. That also kind of trigger some sentiment, positive sentiment in some stock. You can see that Ambrose, as we speak now, is still in green. S&P is in green, and the Nasdaq is also in green. Don't mind not minding what happened in terms of geopolitical tension that was triggered with the with the measure that that fall into Poland, and that also triggers some sentiment. But I think at the G20 meeting that is also going on, clarification is coming gradually that investors or countries in this level should not panic. We have seen impact of Russia and Ukraine war on the global economy. I think these leaders are not interested in making sure that things go wide more than what we have seen so far. That they have tried to counter that. Yes, let them investigate what has caused that, if it is intentional. But also Russia has come out to say they are not the one. We are waiting for this geopolitical tension. Also, what has kind of slowed down activities in some of the markets, especially in Europe. Despite that, you can see that the defensive stock, when I mean defense stock, meaning that those stocks related to war ammunition and those as also as the kind of trigger, kind of awakening again. See them all looking up again within just yesterday and today, and that also is also impacting on this market across the globe, especially those that are into war, the weapons for war and all that. These are the stocks that are looking up. But the good thing that also the numbers that are coming are also still mixed. We saw that in UK, we saw the latest inflation figure hitting about 11.1 or 7, that from about 10.7. This is that's but also that same UK was expecting that the central bank also give us the financial stability of that domain. How is it? Because what has happened in the last few couple of months, changing their prime ministers and also stacking of the minister of finance and all those stuff. We want to really assure. That's why you see there's a kind of a mixed sentiment there and also factors that are driving up and down in that domain. But I believe that as far as this data is going to guide you as an investor what to do per time, which sector that we look at, and where the economy is going. That is why I said in all this volatility, there are factors that will help you to filter this noise, or two that will help you to filter this noise. We're coming to do that later in this class today. But continue, if you look at the oil price also continue to oscillate, and a trigger of what does happen, so that oil price are put back to almost 93.1 to now, it is and also reverse kind of rebounded to around 994.23 dollar per barrel now. This oscillation also a lot of news coming from this missiles hitting Poland, and at the same time other factors like the fear of a recession and also cut of OPEC cutting the outlook forward for demand because of all these are things that are driving the price of crude oil. And as inflation continues to also to kind of slowdown in US. They also, why is it that market also looking up at that? Investors are reading, meaning that yes, this might also kind of reduce the kind of hike we have seen so far, 75, 75 that we have seen in US. That might also, also down here, we're also looking at now we have seen our own inflation figure, or what we call a consumer price index, moving from 20.77 to about 21.09. It shows that yes, we are still on the within the 17 years high so far, but a new level now. But one thing you should also have in mind that if you look at the last 3 months of this period, we are seeing that on a month-to-month basis, we are seeing that inflation has remained on a decline. Just attributed to what, to food inflation rebates. At the same time, the farthest period we are seeing. But I believe that this will continue in terms of consumption. But for the month of November and December, I expect that we should also expect that inflation will still going up. Knowing that the last MPC for the year is coming up, in next week. Because what I said in November, December, because of high demand for what, for good, because of festive period, this period the end of the year, that. But as for January, we might see also a kind of a slowdown, in inflation, and also depend on the outcome of CBN policy that are taken that is outside of monetary policy, naira redesign and all those stuff. How do you to use it to control money circulation and all those stuff? That's how they were also playing out, because I believe that the major factor that is driving cost of operation in Nigeria is more of that of what the FS market that is lacking direction, because that problem in that FS market is kind of eats into the into the cost of production, especially those that are importing their raw materials and all those stuff. These are the things that are also driving this up and down, in inflation. But I believe that inflation will continue to, like I said, for we have seen October hitting 21.09. That trend will continue in November and December because of high demand for goods and services, and also because of the festive period. Despite they are also already in in harvest period, because of this cost, and also the hike in fuel energy is another problem. There are some states where they are buying a fuel 250 already as we speak. Like I know when I travel out of Lagos, I bought my fuel around the 250. While down here in Lagos, we're buying at 170, 165, 169, 179. But other states already in what they're buying at 250. You see, this cost also what is also pushing inflation. As we speak, that means the economic managers need to sit down and put things in order, especially as elections ahead, and we expect that outcome of the election also have a way of triggering where the market to go. But I believe that as we speak now, this is the right time for investors to start a project, because as we already in the second half of the last quarter of the year, and seasonality will start happening moment from now. We'll start seeing different, like I've said yesterday, end of the year and end of the quarter, dressing end of the year. There's some stock on the exchange that will tell you that during that 31st of the month of the year, they hit new high. After that, they start coming down. As a way of this end of the year, as the war for also impacting price of stock. We need to sit down and also analyze that. That is why in the coming Investment 23, we are prepared to let you know exactly what to do. Where are the opportunity in expected financial market reset? Are you preparing? Preparing that it is all coming about. If you really want to achieve your financial goal, or want to make your financial independent, you need to understand what to do with this award, financial market reset or economic reset or political reset that is underway. You need to understand, and that is why you must make our time to be in that class so that you will benefit from it. Like I just said, you can see from the screen, these are the people that are going to speak on that program. Are you preparing for financial market reset in 2023 and beyond? You see the former president of CIS, you can see like Kurufi, a lot of Rashid Momo, MDs of different stock broking firms, and also from Chapuhi. These are people to share what they know about this expected result, so how it's going to affect the whole of the whole market, and where there are opportunities for us. Those that will take advantage of that opportunity, so that it will change their world, their financial life, and also help them to create further wealth, to enhance their financial independence, which everyone is looking at. And this is how we should prepare ourselves and ahead of this financial market reset or economic reset that's underway. We're going to see a lot of oscillation, but in all this, like I tell you that you need to also know how to combine your fundamental and your technical analysis to know exactly what to do. At the time. That's why you need to filter the noise in the market. We have just seen the figure from Bureau of Statistics about inflation. What is the market going to do this morning? We see the market has opened in green. We are seeing a kind of a positive market rate as we speak now. We'll come to that when it comes Also, don't forget that also that as the G20 leaders are also meeting in Indonesia, think to try to fashion out another direction, knowing that the inflation and the interest rate have pushed the economy of different climate to where it is today, and if it's not taken, that the world might go into global recession. For that, all these are part of discussion alongside with what just happened in Poland. But I believe that at the end of the day, we'll see direction where the world is going from this. And also, don't forget our own summit here in Nigeria. Also, we're looking at how to address the issue of what this FS problem in Nigeria to encourage economic expansion, and also thinking of the government saying that 2023 from 2023 June they want to remove subsidy. They want to also see the plan that will be on the ground. Are you because of the Dangote refinery that you want to remove subsidy? What is the production capacity of Dangote? What are you doing in place to make sure that already the high inflation we're seeing today or high cost of living as a result of what energy price? If we're going to do yes complete subsidy removal, what is the plan on ground between now and then? Yes, we have about almost let's say 7 months now till that June. Or like, if what are you preparing before that? These are things that was better. Like I said, you that in the market, if you take advantage of all this, you can see what is happening, or set up, results, how the review performance will tell you that if also now that I said it earlier in one of the class that if some states are selling fuel at 250 naira, and other states are selling, you can see how companies that that into different marketing alone, how they be making money in different different political geopolitical setup of Nigeria, the different states and also areas. These are the things that are likely also to influence their performance. And when it is regulated and as you buy, you sell, we expect to see more profit for this. That's why you as a investor, you should be thinking where to. That's why I say you must not to combine your what your fundamental, your technical. After knowing your fundamental direction, the right thing that you do is you want to know the right price are you buying. With that right price are you buying? Is the company going to maintain their profit margin? You want to know the right price so that you buy cheap and also make advantage of all selling when it gets to what the peak. These are very, very important things when it comes to what investment. Like I said earlier, that the global market is in a mixed direction. US is in green, as the US market is in green, while European market pull back after the early rally or yesterday as a result of positive economic data from US and all those from also both. This morning, because of this negative inflation figure that came from UK, that the rally, and also expecting the kind of report from the the Bank of England to give us the state of what the state of the financial situation of that domain. And result that came also from the automobile companies, or like the auto companies, especially the Mercedes, that came. This result also were not too good, and that also had to drop, kind of pullback. But also the fear of China, COVID-19 issue and all that. These are the factors driving the oscillation around the globe. But we want to pin it down to our market. I've told you what the oil price is doing. We want to pin it down to our market now, but we want to see how can we filter all these noise as investors or traders. You need to know how to fit all this noise, and that's why today, remember I said that we'll be looking at what the moving average in yesterday class. That today we're looking at what moving average, to know exactly what to do in our position now. Now that the market has really come to this level, but as this level has opened, as it continue, and I said for you to really filter the noise in the market, you need to use some technical tools, and those technical tools is what we're going to discuss now. And I want us to use to discuss the moving average. The moving average, we want to discuss and see how can we take advantage of this moving average in our technical indicator. I tell you, most of all the 98% or 99% of traders, in any market, in any windows they are trading, they all use what this moving average for different purpose, for one strategy or other. But you need to understand why it is important also to use this moving average to filter the noise in the market, because it will help you to give you a clear direction where the market is heading to, so that you too will not be in the wrong side of the market. That's why we want to also bring it out today. But for those that are in this class, I've for a long time discussed how to use what our key line, which is the moving average exponential 8. But today we're looking at other moving average. We're looking at moving average of 20 days moving average. How important it is, because it's another focus point for every trader in the market. The 50 days moving average, the 100 days moving average, and 200 days moving average. How this moving average help you to take what decision in the market. You want to look at the importance of this moving average. Like people always ask me, I said yesterday, which are the best moving average? I said I use purely for any markets, any investment, time of time frame. I use my T line. T line gives me a lot of direction, but T line also compared to other under moving average also make you to have more confidence at that time, so that at this point things are likely to change, because at that point people are looking, nearly all the market players are looking at the 20 moving average, are looking at 50 days moving average, and when the price action or instrument you are trading touch this either up or down, break down or break up, there are about to be some psychological change within the market, because of all of them are looking at this. That's why you also want to have to use this moving average, so that at the any given time it will help you to know what to. That's why I said this moving average can be applied to trading any market in any direction and in any time frame. You can see whether moving average apply in all the markets. That's why I use T line for anything I'm doing, so that you see either I'm doing a weekly chart, daily chart, I'm doing monthly chart, quarterly chart, yearly chart. My T line is always there. So also this moving average depends on the one you want to use and the one that you are used to. Because you said one can have the way of interpreting the one you understand. Once you're able to do that, I think that is the right thing to do. So that at the end of the day, you're able to know where the market is and what it is doing. Like moving average indicator. This the pre-discipline average also can come with what exponential pre-discipline average and simple pre-discipline average. And you know that when it comes to exponential average, more weight is given to what to the investor's date in that moving. So that's why you see people that like me now. I look at it to see, because the last day of that day, that is where you see more weight compared to the beginning, and that's why I use it most often. But simple average is just spread is also most times a lagging, but simple average is equally good, give a direction, just adding all the, for example, 20 moving average is taking all the price moving average for that 20 days, add it and divide by 2. But for the moving average, simply for exponential, the big one, the last days has more weight. But why for simple average, it just simple adding and divide by the numbers of the days, and that will give you the moving average. This is how to look at it, that you understand what I mean. But before, no, you don't need to compute it yourself, because it's already done. That's why you don't call the moving average up and bring it to your system and start using it at any given time. But for me, as a trader that you are just beginning to trade, you want to compute all this just to get understanding. But once you master your chart and you agree that you don't need to go and do calculation just to explain it, you need to, once you call your moving average 10, 20, on your chart, no matter the software you are using, whether you are using Ambrose, you are using a MetaStock, you are using a trade view and all. What software you are using, all of them has this moving average exponential. But the focus is what on your price action. This price action will tell you what is happening at that particular time. That is why investor must put attention on that to see exactly what is happening in that particular time. You want to find a way to make what improvement in your decision. That's why you're applying what this moving average. More specifically, you want to find a way to create less lag between the market and also the instrument you are trading. That's why these indicators also come to help you. The simple moving average was just not fast enough to react to what the volatile market swing. That's why we also look the way of the exponential. Traders want an indicator that was not similar to that of a moving average, but would put more weight on recent price action and less in the past. And that is why you see from moving average, simple moving average to exponential. Like I said earlier, that is why people use most like me. I prefer to use the exponential than the simple average, but all of them has a way of helping you to get the information you need to have when you are trading. Want to just come with example now in the market to see exactly how it works before we go looking at the state of the market. We want to look at this simple average. We want to call them up and use it also to interpret what is happening in the market as we speak now. You can see that this is the index action. This action is this you can see here. Let's quickly call up the major indicator moving average we are looking at. I said 20, 50, 100, and 200. These are long-term moving average for 200. 50-day moving average, I tell you, associated more with institutional investors, the PFAs, and the 20 days moving average is used by everybody. But this moving average at a particular time, it gives a sense of direction, and psychology of people always change when it comes to what this different moving average. That's why all eyes on this moving average anytime in the market. You need to also understand that. But today we are calling up the simple moving average, as I just said now. There's want to change this one to simple moving average 20. Sorry, 20 simple moving 20 simple moving average. We are using a blue line here because I'm also coming. This is the 20 days moving average to speak now. Red, then also want to call the moving average 50. The importance of this you get to understand as time goes on in this discussion. 50 days moving average. Want to change the color. Change the color. Change the color to pink. 50 days moving average. Pink. Yeah. 50 days moving average. Want also for 100 days moving average. Yeah, we'll stop at 100 so that kind of a cloudy chart with the let's take 100 as the last one, then we'll not do our explanation here. Okay, this is the simple moving average for 20 days moving average is the blue, 50 days is the yellow here. Then you can now see that the black line is the 100 moving average. You can see the position where they are now. So speak now, and that the market is really seriously what bearish as we speak. You can see that it's trading below what the below all the moving average, 20 days moving average, 50 and the 100. You can see that the market will go. Once the market, this index action or price action start, breaking out, this moving average, the first eye now is on 20 days moving average. Once the market break out this 20 days moving average, to give a psychology, movement to every player in the market, especially traders, that what's about to happen, and it touch the 50-day moving average, where you now see more of a institutional investor. That is where you see them more looking at the even when market is coming down. Once they cross the 50 down, you can see that they also start panicking. You can also see that here that the market has been before now above the moving average, the 20 and 50 moving average, where the price action crossed both the 50 days and the 20 days moving average and went up here. But when it start coming down, they first of all break down the 20 days moving average. But once it breaks down the 50 you can see that the market has remained on that level. That's why on down, because at this point I see that around that May, I see that when the market touched the peak here, that's the time, early June, that's the time that PFA started, when the first inflation, when the first profiting MPR, what is the monetary policy rate was hike. I see that they started exiting the market. No, not that they see their position, they started buying more and start watching since they stopped entering the market, because you see all this period we are seeing a good volume here. You can see volume within this period is different from all this volume here. Really, from here to here, you can see the big volume here that's something and that shows the presence of what or the fund managers, the PFAs, institutional investors. See their volume here, but since then the market has come, I can see that volume has relatively remained below the volume traded average for the market. Only in a few occasions that spike, touch it or break it out, but you can see that all this while that's been above the average. We can check it from here. You can see that it was up above the black line here. Tells you that volume is also very, very important. So what happened here now? That means now that market has come at oversold region. Like I said, you need to know what the market is doing now. The market is trading below the 20 days moving average, and it starts coming up here. The first place to target is this. Once you break it out, you see that market is set to go, and that is why I want to quickly now go the into the live market so that we can look at other stock and what is happening. But to speak, this is the state of what of the market. Our market, as we speak now, like I said at the beginning, that our market, is in green. Market is doing is doing 43,894 897, sorry, 0.47. Our market is up by 89.22 basic point, representing 0.2% of, which is good. And I'll tell you now that the market is on a positive market breadth. As we saw yesterday, we're having 9 gainers against 7 losers. It's a good one for me, and the market is trying to maintain the trend. So yesterday, I told you that this inflation figure, I don't hit it. Also, as many market players and individuals are fearful, and some of them are holding cash. Once they start seeing this economic data and the outcome of the MPC meeting next week, you will see funds coming back to the market. I can see also those like capital that are also losing. Once you start seeing their mark down this up and down, despite this period, as they mark them adjusted up and down, you might see market oscillating. But I'll tell you, when the end of the year start playing out, we will see also price taking on that direction, especially as campaign has started. I will start seeing clearer position where the political side is between to, as also expect to see economic reset, and also financial market reset. These are the things we expect to change the market direction as we go into the end of the year. As we speak, I said I will have a positive market breadth, 9 gainers and what and the 7 losers. Among the gainers charts now, we are seeing that Cornerstone Insurance is leading with 10% up, followed by NSL Tech also by 10%. We are seeing the WAPCO has also come up to back to 21 from 2010 close yesterday. WAPCO has come up again among the top gainers, and see Academic Press and Sovereign Trust. We are seeing other ones that were MTN is up marginally there, and other stocks in that category. These are the 5 top gainers on the gainers chart. Also, if you look at the losers table, on the other hand, I see that Royal Exchange continues to pull back, followed by Codv Business Solution and Japan Gold. I see Transcorp losing a 3 kobo from 111 close yesterday, and Japan and Jaiz Bank also pulling back to trade at 88 kobo as we speak. These are the position of the market now. But don't forget, look at the volume traded in terms of. We're seeing that Fidelity Bank is leading in volume. Yes, yesterday I said that they are UK, UK activity they are doing in terms of trade fair they are doing in UK. I see from the outcome there, you can see that yes, this bank is trying to spread around the world, not only in Nigeria, around Africa and the international market. I think it's a welcome development for Fidelity Bank. Also, as they make move to acquire the Union Bank in London, and also they are doing their trade fair, I believe that it's a good start for them to also make sure that they continue well to expand their tentacle. That is a good one. But as speak now, this bank is leading in terms of volume at this hour, 23.17 million shares up, followed by FBN Holding, that's doing 10 naira 60 kobo, which is good. This bank has sustained a kind of a positive momentum. All this while, despite the ups and downs in the market, it's a good one for FBN Holding, and the numbers that came from the bank also support. That's why I say we must look at the company fundamental and look at what their technical fundamental is very clear to guide you. We are seeing Nigeria Bureau among the volume traded now, followed by Zenith Bank and Boa Food. These are the 5 top active stocks in terms of volume: Fidelity Bank, FBN Holding, and Nigeria Bureau, Zenith Bank, and Boa Food as to speak. But good one that is the market as to speak now. But I will call the T line up now, but that T line will be a red line. We want to use it to look at the whole market together as we speak. Look, these are very, very important things you need to use when you are looking at the market. You need to combine this price action with other indicators, but don't crash your chart with too much indicators, so that it will make meaning at the end of the day. We're changing this exponential. It's always 8 for our T line. Then we're changing the color today to red, so that we're able to get the full position of our thread we're using today for our T line, so that it will differentiate from other in the market. Yes, under in the chart here. Sorry, you can see that our T line now, the market as we speak is already coming up to touch the T line. As the market is in green at this hour, you need to notice it. It's very, very important. You can see where it is now. Look at the market position now. Once the market calls this line, that this line, red line, is our T line. can see where it is now. Market is almost trusting it. I can see it here. Once that is done, it's also a good sign to confirm that market is also looking up as we speak. That's why it's good to always look at it this way so that it will give you the kind of insight of what it is for the what the market position. But let's call other indicators like money flow and the what and our stochastic RSI so that it will guide us also more to know the momentum in the market and what is happening as we speak. You know, because yesterday we saw that money flow was looking down, but this morning already seen a reversal, and it's a good sign that strength is coming back to the market as we speak. Yes, well, you can see from here that as I show you, the T line market is about breaking out. Once the market break out the T line or confirm also a buy position and also tell that the market is heading somewhere. But a good thing is that the market in green, we are seeing that money flow has come back to 43. Yesterday closed at 39.95, no 39.96 yesterday, but already as we speak now, money flow is already in the 40. I said once it break out this 50, which is this point here, it's a good sign, and market is already in 43. It's a good sign, and we are still also reversal in what the momentum. The momentum remain above for me 80 is a good one for the market. It says that yes, we are seeing a stronger momentum, and also we are also seeing a better buying position. Yesterday we saw buyers are more in the market. That's why there was a missed sentiment. Also today we're seeing that already at the beginning of the market at this hour. For me, it's also a good one for us to watch. These are the things to also consider at this moment. Yes, first now I want to look at those stocks that are making wave now. I want to look at what is happening in Lafarge at the speed. That is WAPCO at this hour. Let's consider WAPCO at this moment. What is WAPCO doing? Lafarge Africa. What is it doing now? I want to look at the chart of Lafarge to speak. You can see that in all the moving average I put here, and also the T line on a day chart is below the T line. Once it break out, but the good thing is that come down and look at your momentum indicator, you see that at the Vaso region that's also start looking up again. This is true momentum coming up. Good one. I'm also saying that trying to look up here around 20 points for money flow. For me, we are already seeing a reversal after it pulled back yesterday. We are seeing it here this morning. It's a good one, but let's look at 1 hour chart for WAPCO. That will give us a sense of direction of what the market is doing. You can see on the 1 hour chart for WAPCO, there's a good strength here. I can see it here. Now it's already above the T line on the 1 hour. You can see money flow looking up 40, and as you can see reversal from here. But looking down, we can now up now on the 1 hour chart. This is a good sign for what for WAPCO. WAPCO formation is very good. And also it has also crossed the 20 days. You can see now across the 20 days moving average, T line and also the 50 days moving average. It's a good sign that we are seeing this stuff. But left what with a 100 days moving average, go to the black one here. For good one for WAPCO, we are seeing a good move here. For those that are in WAPCO that took advantage of the pullback, fine, kudos for you. That is a good decision. Like I said in the class, in the class today, okay, on the program today, and also in my write-up. Let's look at the FBN holding as we speak now. FBN holding. This bank, I'll tell you, or this holding company has full strength all this while to remain. Yes, you can see the good thing. This tells you that there's something happening in this stock. This is a 1 hour chart. You can see as we speak. Yes, that's why 1 hour we're seeing a pullback here below the T line now. But trading above other moving average, the 20-day moving average, 50 days on every run. You can see how strong this FBN holding is. So that if you are this kind of position, you don't need to panic. A lot of people call me, can I sell my? I say yes, we are seeing a better number, but might not expect a good dividend to come. But the performance of the company has started to sustain it in that direction, and you can see the performance on the psychology of people in this position. They are not selling. You can see that they remain above the T line. That's why going up and down, even with this period that is still up and down here, but still remain above the T line on the 1 hour chart. For quick one, we are seeing already sign of weakness on the 1 hour chart, set down below the T line. You can see what it means, which also reflected on the money flow and on momentum. So please look at the day chart to give us the real position of the stock. On the daily chart, even at 100 moving average, the stock has crossed it. You can see how bullish the stock is as we speak. This is a good one. Look at all this while when it crosses the T line from here, start pulling back. When I tell that whenever it crosses the T line, it's a sign that do not panic. You can see it remain above the T line, which is the right line here. I can see now as we speak, after going high, I told you when you see that the price action is far from what the T line is a sign of what profit taking. That means that is time for you to take. You can see where a touch here high, then the next you can see that we have not broke down the T line, but it's a sign that weakness, that profit taking has started coming on the stock. That's why we are seeing it here. But money flow is just looking down slightly, and why the momentum remains stable at this high here until it starts coming down to. But I'll tell you, this is strong momentum for what, for first part. Let's look at first every holding. Let's quickly look at the others in that category. Let's look at what is happening in NACO. Look at what is happening in NACO, because NACO is among also the top winners. Look at NACO before we go to GT code and the others. Look at what is happening in NACO. We need to look at that. So it's very, very important at this point. Look at NACO. No, NACO as speak now is trying to rebound. You can see it here. Was slightly flat on the T line. You can see, can see what NACO is doing now. For me, NACO is trading below 100 moving average 50, and the T line and the T line, and also below 80. You can see that once it crosses this moving average up, a good sign. But we're seeing that money flow is just going down here small, and we're seeing that the momentum is still strong since above 50, but slow down momentum again in NACO for a day chart. Let's look at the 1 hour chart for NACO. What is it saying? In the 1 hour chart, you can see that here the stock is still above 100 days moving average, above T line, below the T line, and also above, slightly below also the 20 days moving average. You can see it here. Let's keep our finger crossed for this stock. But finally, look at GT code and Access Bank, Zenith Bank briefly before we call it a day. GT code, want to look at what the bank doing now in all this. Yes, GT code, I will tell you, the GT code on the 1 hour chart. You can see that they have been above the T line, and above the T line, even above 100 days moving average on the 1 hour chart. Can you hear me? Above 100 days moving average, everything is a sharp movement for me. It's a good one for this stock. You can see, despite that we're seeing a slowdown here, to show profit taking, but let's still keep our finger crossed ahead of the company corporate action for the full year. But the good thing is that the stock has tested 50 day moving average. A breakout to be very, very good for because I see that been below 50 day moving average for all this while. I told you yesterday, once a breakout, for now, it's also below the 100 days moving average. To speak, above 20 days moving average, above the T line. Good. You can also see it here, sharp, strong momentum on a day chart. You can see it for the stock. And money flow is within 35. For me, it's a good one for GT code. I mean, if you are there, don't panic, hold your position and see how to make money. Almost touching around 1840 today. That will be good, and that is nice. 1840 today is a good one for the stock. Let's quickly look at what Access Corp is doing. Then we'll now finally look at Zenith Bank before call it a day. Access Corp have tested you can see that 50 days moving average simple will now become like a resistance for Access Corp. It touched that point and started coming down again. We have to expect a reversal, but if you look at the momentum is very, very strong for Access Corp. Very, very strong. And money flow around 71 is still very, very strong. But now it has not break down the T line, but tested it. But on the board, as we speak, let's see how the stock will go at this point for Access Corp. With the information we're hearing on the earnings and all those stuff, we expect that also increasing insider investment or playing, insider buying. That's a sign that something is happening there. When you see insider doing more, especially when it comes to the MD, the CFO, the directors, give inside that there's something they are seeing. And we're seeing that as updated, as market being notified of the activities of insider trader, and that is a good one for the stock. Now finally let's look at Zenith Bank. What is happening in Zenith Bank now today? What is happening there? Zenith Bank. Let's see. This will be the last chart for today. Zenith Bank also, you can see it has also, Zenith Bank has not broken out the moving average, but almost on it, but below 100 days moving average on a day chart. We are seeing a good momentum also. These bank stocks are showing us that the strength. That's why I say you must look at what is happening in the entire sector to see where they are going. You can see positive chart for the banking stock as to speak. For me, it's a good one. This crossover of the moving average is a good sign that they remain above the T line and they remain above the 20 days moving average and almost breaking out the 50 days is a sign of strength coming to the market again, or coming to this individual stock or the sectors where they operate. You don't need to panic. Yes, I said it earlier that market generally it's at the overstood region. What does it mean? It means that it's time for you to take position in those fundamental sound stock at a good price. That's why you know how to combine your challenge. So we're bringing out all these indicators to guide you when you're taking your investment decision. But I'm telling you, the coming invest today, you will see that all these these charts and all that will be used. But you can see the topics and whoever is going to handle them, they have all preparing for work for that day. That you make out time to join us at this event. Don't miss it. Just go now and your itinerary and not that day, the 3rd of December, the first Saturday in December. That is the day so that you take position for the work for the rest of the year and ahead of what 2023. I tell you that as the election is coming, people are panicking, but those that understand the power of positioning early, and also those that want to achieve their financial independence, know that it is when you take action as you attend such training, your portfolio will do that. And yes, you might also say the market is down early. That is the market, but I believe that that market has opportunity to give you, while off market also has opportunity for you to sell and make money. But the time to buy is at this point now. Yeah, that's why you must prepare yourself to take position ahead. Yes, I will also let you know that I have a conference to attend as from tomorrow. That means hopefully we'll be coming back fully on live class on Monday. Again, I'll be available tomorrow and Friday. But our QA, I'll find our time to get to that conference also to make sure that we have our Q and A section on Saturday. Today will be the last day for this week for live class. Tomorrow and the Saturday Friday, I'll be in that conference starting by tomorrow as early as what? As early as 8 in the morning till almost 5 in the evening. I know I to be that's one very serious one for that. I might not have time. Like I said, we'll start live again on Monday, hopefully by God grace. But on Saturday, question you have, feel free to ask and also to address at the meeting. I will say thank you and enjoy the rest of your trading day. See you on Monday.